Hello everyone, Stephen here, Case for Silver, and I'm here with another video, and today I want to discuss one of the most important ratios that I know of and I track is the gold to silver ratio. Highly critical, highly important for what's coming to track the market. One of my exit strategies is based on this chart. So we're going to go through it. I want to go all the way back to the Roman times to see what their ratio was like and kind of make our way through, kind of analyze the charts and see what we can find. So I'll kind of make my little picture here a little smaller, like so. And we are going to start with, this is from mining.com. Ancient Rome was one of the earliest ancient civilizations to set gold to silver ratio, starting as low as 8:1 and 210 BC. Over the decades, varying gold and silver inflows from Rome's conquest caused the ratio to fluctuate between 8 to 12 ounces of silver for every ounce of gold. So pretty low here. Silver was obviously valued a lot higher than it is today. By 46 BCE, Julius Caesar had established a standard gold to silver ratio of 11.5 to 1. Shortly before, it was bumped to 11.75 to 1 under Emperor Augustus. As centuries progressed, ratios around the world fluctuated between 6 to 12 ounces of silver for every ounce of gold, with many Middle Eastern and Asian empires and nations often valuing silver more highly than Western counterparts, thus having a lower ratio. So very interesting fact here. Going back in history doesn't mean that was right. I'm just going through what it has been in the past. So if we look at this chart now, which brings us back 100 years, as far as I could get back to, we're looking at here in 1915, 37.75 to 1, and you'll see this is less choppy, probably because they don't have as much data. We peaked as low as 1919. That was in, year 1919, 1773 was the ratio there, so 17.73 ounces of silver to make up 1 ounce of gold. Then we kind of topped out here in 1940 at 97.31, so very high, right? And then we kind of have these waves, right? So you can see twice we've peaked. So we peaked in around 1919, like I said. We peaked down below here around 1968. Again, 1980, and we also had one in 2011, but you can see the bull market in 2011 was short-lived, right? It was a kind of a spike in silver, which I experienced, and it came down here, touched almost 30, right, and then jumped back up. So my base case is that we will have a blowout of gold to silver ratio to the downside here, probably under 20 to 1, right? So if now we're going to switch over to this chart I kind of prepared and that I've been watching, not prepared for this video, but added a few more things, right? So the start on the left side here, we're starting in 1997, right? And we're going all the way through today. So as the price is, not the price, but the ratio up here, right? Silver is cheap, gold's expensive, and the reversed down below, silver is expensive and gold is cheap. And you can see here the 2011 peak that we have. So I'm going to kind of go through this. We started at around 72. That's the furthest that we can go here on this TradingView chart. We kind of went down all the way to 38, kind of flipped back up to 83, all the way back down to 45, 46. And then we hit that same ceiling right here at 83. So right away we can see that this was kind of a significant ratio number here around 83. So remember that's in 2008, 2009, then back here in 2003. So almost 10 years separating these two peaks. Then we come back down here, right? 2011 top in silver, which means the bottom in the ratio. So that is at around 33. Then we come back up, and lo and behold, we test the same level once again. So this is why technical analysis is, to me, very important, because you can see where sentiment's at, right, and where the greed is at when it comes to whatever asset you're looking at. So we're looking at here 82. It hit again, right? Then we came back down 2016 all the way into 2017. Not a major correction in the ratio. We came down to 70, 68, 65. We kind of stuck around this area. We came up here, and I'm going to zoom in, if you'll allow me to zoom in here, to the most recent information. So we kind of consolidated here. See, we tested it. We came back down. And then you'll see this a lot when we want to break out of certain patterns. We kind of test it, just kind of quick little pullback, kind of get our energy back, kind of wind up the spring, and then finally, boom, we go through it. We cross above it. We retest it once again. So this is, again, that 83 level. So important. And then we kind of rise above. Now we hit 93, which was extremely high at this time. And let's just go back. No, see, we hadn't, in the past 100 years, we hadn't hit that level. So that was a new level. We came back and we found excellent support again here, 82, 83. So we knew that this was going to be support. It was such good resistance before that it became our floor. We kind of had this blow off top, which I think was the top of probably this century. That's just a guess, but we peaked at around 125 ounces of silver for 1 ounce of gold. So pretty amazing. That was in March of 2020. I remember buying some physical here right before the premium shot up, and since then this was the premium. This is where premium got added to all the silver coins and kind of stuck around and is still around compared to before this actual peak, right? So then we came down and we actually blew right past this support zone. So we it had so much energy that the energy that kind of got built up had to be brought back down, kind of crashed down below, went all the way down here. And then we tested that other support that we had previously, right? So right at 68, kind of came back up. We're at 83, came back down, 67 again, 68, found support there, kind of went a little bit underneath it. It was a false breakdown, right? And we came back up, and now we've been trending up all the way until September 2022. This is where we kind of found that same resistance, right? Around 90, 92, hit our head on this, came back down, broke this support line that we were looking at, that I was tracking actively, broke down below. Now we came back and retested it. So we have retested it, and it's still a green candle for the month. It's going to end tomorrow. So this thing will end green. So it's not bullish yet for silver, in my opinion, for this, but it does show that momentum is to the downside. Now we could even add, if I move myself a little here, let me add this trend line, right? We could add this as well. So that is obvious, right? So that we kind of hit that. We had two touches. We might come back up, kind of consolidate, maybe hit back up here, I don't know, and come back down. All that to say, this is a monthly chart. So if you want to make money tomorrow in these assets, silver and gold, find something else to look at, because this is not going to reward you quickly. But when it does move, I'm telling you that it moves quickly, like we did here in 2011 when we kind of hit 50. And my estimate here is, since we did have this major up move here in the ratio, we are going to have the same thing to the downside once we break my second target here. First target 48, second target 33. And then will we go back to ancient Rome, to 1 to 8? This is a possibility for sure, right? And I did a bit of research as well, because this is all price action and what I guess humans have been calculating and have been evaluating, because that's all we're looking at, right? What humans, different societies, different centuries, what they valued silver to gold at. And if we look at the ratio in the Earth's crust, we're at about 1 to 19. So for every 19 ounces of silver there is in the ground, there's 1 ounce of gold. So we know here, using that metric, that silver is undervalued compared to gold for sure. And the actual mining of the stuff, which is, I would say, no matter what this ratio was, if it was reversed, I would say the same thing. But the mining is what really matters, right? So 1 to 9. So for every ounce of gold that's mined, 9 ounces of silver is taken out of the ground. And then we can go into other stuff later. But obviously, Silver, all the gold that's ever mined is still above ground, pretty much 99% investment grade bullion or bars, but silver is quite a different story, which is why I'm so bullish. But I'll go into reason number 2. So I guess we can call this reason number 1, the reason why I own silver. It's kind of the full picture. I hope you've enjoyed this video. Please hit the subscribe button if you want more of this in your inbox. Comment below if you got questions, anything. Also, any specific companies you'd like me to look at and give you an analysis on, I'd be happy to do so. So I'm kind of coming back with this YouTube channel. Going to spend more time on it, try to dedicate more time to my learning and trying to explain it, so to make it a stronger lesson learned for myself, and also to provide that those teachings to you as well. So yeah, I look forward to my next video, and I look forward to the next big move in silver, which people ask for time frame, but I'd say within the next decade. I know it sounds far in the future, but I've learned my lesson of thinking everything's coming tomorrow. We'll be patient, and we'll be rewarded by our patience one day. Thanks for tuning in, and talk to you next time.